Alphabet, I have rated as one of my top stocks to buy in 2025. In 2024, it was the top stock I had rated as a buy. It delivered excellent returns in 2024, beating the index. So a lot of my viewers are expecting me to report continuous updates on Alphabet, which I will of course do. In this video specifically, I'm going to talk about three things that Alphabet investors should know more about. And the first one is going to be the Google Cloud segment and the progress in that category. Second one, I'm going to touch a little bit on YouTube and how that relates to Alphabet's overall business progress. And finally, I'll touch on its driverless car ambitions with its Waymo segment. So let's jump in with Google Cloud. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. In 2024, Google Cloud reported the number of first-time commitments more than doubled compared to 2023. More than doubled. They also deepened customer relationships. So existing customers spent more and engaged more, and they added new customers. Last year, they closed several deals over $1 billion, and the number of deals over $250 million doubled from the prior year. This is the segment that Alphabet says they're spending the most on, is the Google Cloud segment, or in other words, their data centers optimized for artificial intelligence, which is embedded in that Google Cloud segment. Their AI segments are included here. So as to not be too dependent on NVIDIA's GPUs, Alphabet has been increasing production of their own, what they call TPU, Trillium, and this is their sixth generation now, and the sixth generation delivers 4 times better training performance and 3 times greater inference throughput compared to the previous generation. So they're building out their own chips, and this is to rival, not to directly compete with NVIDIA, but to offer another option for businesses that want to use this service, but they don't want to pay for that, top tier. Maybe they don't need NVIDIA's GPUs because they don't need like top level type of performance. They just need the lowest cost maybe, and that's what Alphabet's Trillium can provide. Also, Alphabet can use this for their internal use cases, which is what they've been based on, primarily for their internal use cases, which will lower their own computing cost. And just last week, they were the first ones to announce that a customer is running the highly anticipated Blackwell platform. And if you're unaware, the Blackwell platform is the latest technology out from NVIDIA, and Alphabet is the first one to have this up and running as of right now, as of mid-February. So that's great news. The Blackwell platform, NVIDIA said, is sold out for 3 quarters in 2025. So the soonest anyone else can get it is like later this year. So Alphabet has been a competitive advantage here by having this platform already up and running. And of course, because of Alphabet's size and scale, it's able to secure preferential treatment from a company like NVIDIA that's sold out, right? Anyone else other than Alphabet, Amazon, and Microsoft, and maybe Meta Platforms that wanted access to this had to wait in the back of the line, where these large tech companies got first dibs on the latest and greatest from NVIDIA. So Alphabet in the fourth quarter introduced Google Agent Space, which helps enterprises synthesize data with Google quality search and create Gemini-powered agents and automate transactions for employees. Alphabet's been working more and more on implementing these AI capabilities for enterprises to make existing enterprises more effective with the same amount of people, or to be able to do more with less people. And these types of automations remove a lot of busy work for businesses and allow them to have greater capacity because they can automate these types of things that are repetitive and happen very quickly and need to happen very often. All right, so now let's get to YouTube. And Nielsen data shows that YouTube continues to be number 1 in streaming watch time in the US, with their share of streaming now at a record high. And I'm not surprised to hear that. In my opinion, of course, I could be biased because I'm on YouTube, and I spent so much time creating for YouTube, but I also spend a lot of time watching YouTube because it's my favorite streaming app by far, because I find more things that I like to watch on YouTube than on any other platform. When I go on Netflix, it takes me forever to find something to watch. My kids make fun of me because it takes me so long to find something to watch on Netflix. Sometimes I don't even find something. But on YouTube, I'm, you know, rarely ever disappointed when I open the app and the recommendations are very customized to the things that I'm interested in, and I find things to watch. I subscribe to the premium version of YouTube because I think it's worth it to remove the advertising. But even if you don't, you get to get all of that content for free and with ads. And I think that's a great value for consumers worldwide. Viewers worldwide get access to all of this great content on YouTube for free. And I'm not surprised to see its success. And I wouldn't be surprised if YouTube continues to gain market share because of the already massive scale. So many creators are already on the platform making content, more than 2 billion monthly active users on YouTube. That scale will be difficult for anyone to encroach upon with a similar strategy, free ad supported strategy. So this, I'm not surprised, and it's one of the reasons why I like Alphabet stock so much, is because of the YouTube segment and the potential over the next 5, 10, 20 years for YouTube to grow to be a meaningfully more part of people's viewing habits. And finally, let's touch on Waymo, which made tremendous progress last year. It served more than 4 million passenger trips. It's now averaging over 150,000 trips every week. This was up from around 100,000 trips every week 3 months ago. And looking ahead, Waymo will be expanding its network and operations partnerships to open up new markets, including in Austin and Atlanta this year, Miami next year, and they're also arriving in Tokyo for their first international trip in the coming weeks. So already Waymo is delivering excellent progress in offering driverless rides, and they're also developing the sixth generation Waymo driver, the Waymo car, which will be significantly lower hardware cost. And that's the big key here for Waymo, because they utilize more expensive technology than, for instance, what Tesla is trying to approach this with the camera only approach. And that could be why it's taking Tesla so much longer, is because they're trying to get the hardware right at a lower cost so that they can scale more efficiently. Whereas Waymo, the costs are much higher. And so they're approaching it from a different viewpoint. They're approaching it from, let's get the safety right first. Let's be 100%. Let's try and be as close to 100% safety as we can. And then we'll work on lowering cost as we learn about the hardware, as we learn about the customer usage and how we can improve and implement the innovations that are coming out in the market. So already several major cities, and it's good to see this because I was just reviewing Uber's quarterly conference call, and they talked about how the autonomous vehicle industry could be worth $1 trillion annually in the US alone. $1 trillion annually in the US alone. And so for Alphabet and its Waymo segment, that's a massive opportunity. And even if we say, well, your hardware costs are too expensive, you can't be everywhere, you can't be in all of the US, they don't need to be. They can focus on, let's say, a dozen of the largest US cities, and that can incorporate a population of, let's say, close to 100 million, or let's say closer to 50 million, which is, 20, 25% of the US population. And if they can get, let's say, a 25 to 50% market share in those very large cities, that can be enough to generate 50 to 75 billion dollars in annual revenue for Alphabet, and that's just in the US alone. If they can target large cities like Tokyo and, London, England, Paris, France, around the world, and just focus on the most profitable targets. They don't need to scale to be everywhere in the world. That might not be economical to do so. It might generate better unit economics to approach it in this way. It remains to be seen which strategy is going to be more successful, but already Alphabet and Waymo, they have a nice head start in the industry, capturing these large markets in early days, and it'll make it difficult for anyone to encroach into these markets once they've already established themselves, built a customer base, built customer trust, and delivered good quality. This could be a massive opportunity and upside that is not really getting priced into Alphabet stock right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.